Hi everyone, welcome to FOREX Trading Empire live top-down analysis. Last week on the daily time frame of USD JPY, I talked about price staying above the daily fair value gap. That if price were to go below the daily fair value gap, I will be looking for a retracement lower to the daily order block, which you can see last week price traded lower, traded below the daily fair value gap. Used it as an inversion fair value gap, traded lower on Friday but did not reach the other block, which currently now I'm looking at price anticipating a retracement to the other block. But if price were to go above this daily fair value cap, there might be a chances of price trading higher. So the bias that I'll be standing to going in this week is to see lower prices to trade to the other block. Then if price were to respect the other block to trade higher, then I'll be looking for higher prices. But in any case, in price trading above this daily fair value gap, which currently you can see the price already above the daily fair value gap, and there's a chances of price trading higher. If there's any chances of price trading higher, then I will be taking that advantage of price trading higher. But my overall bias is to see lower prices to the daily fair value gap. But at the same time, price might respect this consistency of down close candle. You can see a series of down close candle trading lower to new week opening gap, respecting the new week opening gap, trading higher. Maybe some chances of price using it as a support, not trading lower to this other block, and we might see higher prices on the dollar index. I'm still putting that into consideration. Mostly I'll be looking at how the 1 hour will be reacting to price trading higher. But I would like to see price trade to the other block. Where if price were to use the down close candle, the consistency of down close candle, then we might see higher prices trading higher. Just pay attention to how price is reacting to the new week opening gap on the 1 hour time frame, which you can see from the opening price. Here's the opening price, and here's the new week opening gap. Price stayed above the new week opening gap, respected the other block and the fair value gap, traded higher, which in S-drawn liquidity should be this high if price was to keep on trading higher. But though I don't want to take any trade on Monday, I'm mostly going to look at how price will be trading inside this daily fair value gap. And if this trend was to continue trading higher, which I pointed out from the daily time frame, that I'll be looking for higher prices trading higher. Next is Euro USD. On the daily time frame of Euro USD, I'm currently looking at price trading higher, respect to the daily fair value gap, which currently now price have traded to the daily fair value gap, which I try to take a buy for price to run that high and go for the raw buy side liquidity, and I was stopped out. But I'm still looking at price trading higher. And price might keep on trading lower if the dollar were to trade higher this week. We might see lower prices going for the new week opening gap. But unless there's an otherwise to the bias, I will still stick with the idea of price respecting the daily fair value gap trading higher. On the 1 hour time frame from the daily fair value gap, you can see the other block where I was looking at price to respect from the 30 minutes, where I took a buy, which I was stopped out. Shift in structure, order block is a breakers block. Retracement to the breakers block, traded through the 1 hour fair value gap, and price stopped me out. But I'm still looking for higher prices. If I can see a good shift in structure trading higher, then I'll be looking for a continuation. My target is to see price run the equal high and overall the buy side liquidity. Next is GBP USD. On GBP USD, I'm currently looking at price respecting this other block. Last week, price from this other block, as soon as price retraced to the daily fair value gap below, At the same time, price was still online with the inversion fair value gap, so there's still a high probability of price trading higher. So currently, I'm looking at price respecting the daily order block. I might see higher prices for price to trade to the daily fair value gap. On the 1 hour time frame, 1 hour time frame from the opening price, price traded lower to the new week opening gap. I pointed out this new week opening gap on last week top down analysis trade review. Talked about if price was to stay above this new week opening gap, there's a high chances of price going for the daily fair value gap. From the opening price when price traded higher, took at this high, I was looking at this area as an entry, but mostly I was looking to trade it during the New York section on GBP USD to anticipate higher prices to run this high and this highs above. So going into lower time frame from the 5 minutes. So we still have 30 minutes before New York section. So I'm still looking at price. Want to see that good shift in structure. I'll be anticipating a higher prices. Just a little into the trade. And my overall target is to see price run the buy side liquidity. The buy side liquidity is my overall target going in on today's price action. This is the only chances of me even taking a trade today's Monday. If I could see that shift in structure, trading higher, then I'll be looking for higher prices to run the buy side liquidity. Daily time frame of USD JPY. Currently, looking at price, my attention is price respecting this sort of block on USD JPY. I want to see price trade to run this high. Because last week I talked about price running the buy side liquidity. I talked about this retracement to this new week opening gap and the other block. Same price respecting the other block so far Monday. Price have stayed above the other block opening price. There's still a chances of price trading higher, running out the buy side liquidity. So this is a quick intraday setup. You just look for a retracement on the 15 minutes and use the 5 minutes for an entry. Your drawn liquidity is to see price run the buy side liquidity. But for now, my bias is to see price run this high. Now, after price takes out this high, if I can see a 1 hour shift in structure aligning with a daily, let's say candlestick pattern, then I might look for a retracement lower to run the swing low. But for now, all I can say is that price going for this buy side liquidity is the drawn liquidity I'm looking for price to trade to. I want to see price trade to buy side liquidity. On the 15-minute time frame, you can see the trend from the opening price. Price traded above the new week opening gap, respected the new week opening gap, traded higher retracement, respected the other block, traded higher again, took at this high, fair value gap, still came close, took at this swing low, but price was still respecting the other block, respected the other block, traded higher. Now, if price was to trade higher, which means the dollar index will be trading higher to run the buy side liquidity, which we might see higher prices on the dollar index. But so far this week, I wouldn't call it a week that I have a strong bias to where price is trading to. I'm still having a conflicted bias. When you go to the dollar index, I'm still having a conflicted bias on where price should trade to because there's still a high chances of price trading higher because of the consistent those down close candle might be the support area for price to trade higher, and so far we have been seeing price respecting those candles. So having a strong bias this week, I don't have a strong bias on where price should trade to, but I'm sticking with the idea that whatever price do today, Monday, then I'll be using that as a catalyst on where I should anticipate price to trade to. Which overall, if price were to respect those down close candle, then we should see a good shift. With clearly we already identified the shift. You can see there's a shift in structure and price trading above this daily fair value gap is a strong probability of we seeing higher prices. So price might use it as an inversion fair value gap to trade higher, and the next draw on liquidity will be the daily fair value gap. So I wouldn't advise anybody to take a trade today. Just wait for those confirmation. If price was to stay above this daily fair value gap, then you can look for higher prices. Pay attention to the 1 hour fair value gap and anticipate higher prices. The next drawn liquidity should be the daily fair value gap. At the same time, pay attention to the new week opening gap. Price of reference to it, trade above the new week opening gap, retracement to the new week opening gap. That is a good catalyst for you to look for a buy for price to trade higher. But so far, I wait to see what price will be doing on Monday, which is today. Then I will be dropping an update on the FOREX Trading Empire channel on the Telegram channel. So if you want to have access to that channel, the link is in the description below. So when you click to that profile link, you will see the Telegram channel there. So you subscribe to the channel. I will be dropping an update on where I'm currently looking at price to trade to on the dollar index because currently now there's still a chances of price trading to the other block before actually trading higher. But at the same time, seeing this shift in structure, there's still a chances of price trading higher. Overall idea is to see where price will support. That's the overall idea on the dollar index. Where would price support? Currently, I'm pointing at price will support from this other block, but looking at those down close candle from the daily time frame, there might be a chances of price using this area as the support. You might see price use this area as the support to trade higher. So Monday will be giving me that confirmation to where I'll be looking for price to trade to, which will be updated in the Forex Trading Empire channel, the Telegram channel. And if you want has access to that channel, it's completely free. The link will be linked in the description below. So let's go to the code, which I've included gold to the top-down analysis because I already started talking about gold, so I rather just keep on the momentum, telling you guys where I'm currently anticipating gold to trade to. So far, I told you guys I'm anticipating higher prices on gold to trade to the daily fair value gap, which price traded to the daily fair value gap, respected the daily fair value gap, did a retracement to this daily fair value gap, which clearly you can see here's an internal shift, respected this daily fair value gap, did a retracement, but did not take out this swing low, did the internal shift, traded through this daily fair value gap. Retracement to this daily fair value gap, I will be anticipating higher prices on gold for price to run the buy side liquidity. I will be anticipating higher prices for price to run the buy side liquidity. This is my overall bias on gold, which I'll be paying attention to the 4 hour and the 1 hour, looking at how price is trading. What I'm mostly looking for is to see that good shift in structure on the 4 hour and the 1 hour. Once I can identify the shift in structure, looking for a retracement to a fair value gap or another block, depending on which one price I'll be using, then I'll be anticipating higher prices to run the buy side liquidity. Now, based on correlation on how the dollar is correlated to gold, if we're to see higher prices on gold, which means we might see lower prices on the dollar index. But for now, I can't put a point on those correlation, but I would like to see those correlations stay correlated and see higher prices for price to run the buy side liquidity. Now, if price were to trade below the daily fair value gap and see lower prices, just pay attention to the other block. That might lead to the continuation higher. If price were to keep on trading lower, just pay attention to the daily fair value gap. For those that do trade good, pay attention to the daily fair value gap, which is this candle, and see how price is trading to the candle. You might be wrong overall, and price might trade lower to run the low. But as soon as price trades below the mid range of this other block, I can tell you guys to stop. Don't look for buy. If gold were to trade lower and go below the mid range, don't look for buy if price were to trade lower below the mid range because there's still more chances of price going for the swing lows. But if price was to stay above 1 hour shift in structure, then there's a high chances of price going for the buy side liquidity. You can still look for buy if price were to retrace lower, coming lower to the other block, but as soon as price trades below the mid range, then there will be no more buy. I wouldn't be looking for any buy trading higher. I'll be looking at how price will trade throughout the week. Then I'll be looking at how I can take advantage of next week based on what price will be doing this week. There's one thing you need to understand that it's not every week you try to catch good trades. Most times you spend those weeks looking for those times where price will be presenting itself to you, giving you those high probability trades. And those times is for you to be patient when price is ready to expand. Like in this example, price is ready to expand once there is a 4 hour or a 1 hour shift in structure. Just toggle through both time frames. Once you can identify that shift in structure, then your draw on liquidity is to see price trade to the buy side liquidity. So that is it for this video. See you guys in the next live top down analysis.